Meantime, let's talk about some of these big market stories and themes with Stephanie Link. She is Chief Investment Strategist at Hightower and CNBC contributor. Steph, we talked to you about JP Morgan, but since then we've got a couple of others. So what's your take on how the banks will trade and whether or not they'll continue their streak?
Well, it's good to see you again. Goldman Sachs, it really was, as Wilf just said, an absolute blowout. I mean, my jaw dropped when I looked at total revenue up 102%, but record investment banking revenues. And I know people wonder about the sustainability, but the backlog in investment banking was at a record level. That's about 21% of total revenue. The bigger story is global markets, which is 43% of total revenue. And in that, you saw up 47% year over year and up 78% sequentially, with equities growing 68% and FICC up 31%. Just by comparison to JP Morgan, their equities business was up 47% and FICC was up 15%. So Goldman is just totally taking market share, and they're really just humming on all cylinders. An annualized ROE at 31% was the best since 2009. So I think that stock should be actually up more, but it's up 86% in the past year, up 24% year to date. But I do like that report was obviously the best. Wells Fargo, I think, we talked about it last hour. It's not really so much the quarter per se that really matters. It's really about the turnaround. It's when they get the asset cap lifted. It's what they do on asset sales. We know they just sold off their corporate trust business. And it's also about their expense base. They have a goal to save about $8 billion from their expense savings plan. And let's get progress on that. But one thing about Wells, their ROTCE was 12.7%. Their goal is to get to 15%. Everyone was very skeptical. Last quarter, it was 10%. So they're making progress for sure. And I would also say just within the kind of the segments of Wells, the highlight clearly is wealth and investment management. That actually did quite well.
And so the question is, what is the extrapolation of all of these various data points from the banks this morning to the other banks out there, especially the ones that you hold, like a Morgan Stanley?
I mean, Morgan Stanley is a little bit different animal than Goldman Sachs, right? They used to look a little bit more similarly, but now Morgan Stanley is really diversified. I think that they will do just fine, especially on the wealth management business. But also, let's see what they do on the integration with Eaton Vance and E-Trade. I think they're going to do very good synergies on both fronts. And so, it only trades at 12 times earnings, and it's actually lagged year to date, up only 16%. But of course, it was up 106% in the past year. So I think Morgan Stanley is going to have a very good quarter. I think Bank of America will have a solid quarter, but I do not expect net interest income to be up. I think we have to wait a couple quarters out, as well as net interest margins. That's the story in the second half of this year for Bank of America. But the stock has done very nicely year to date, up about 30%. And so expectations are high, but the valuation is still attractive. So I still like those two very much. But I think the theme, as we talked about earlier, is really reserve releases, and people don't pay for that. So that's why you want to try to find other areas within banks where you can see valuation and value creation. Like I said, turnaround at Wells. Morgan Stanley is M&A, and Bank of America is eventually the yield curve steepening.
Shepard Smith here. Thanks for watching CNBC on YouTube.